Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday, the 15th of May, 2024, just getting on towards 6 p.m. Central Time. So maybe before we talk about the day's events and what happened in price, we take a look at what caused the day's event, and I want to get to that right off the bat. We had the CPI come out early today. If you take a look at the headline number, month over month, it was up 0.3. They expected up 0.4. And in March, it was up 0.4. So you dropped 0.1. When you drop down to the bottom, the ex-food and energy year-over-year CPI, you came in at 3.6%. They expected that, but that is still down 0.2. Then you look at advanced retail sales, and it came in flat. And they expected a gain of 0.4, but ex-autos, it came in up 0.2, and that was what they expected. So what these markets, in essence, did is the market, again, is reaching for any tenth. I mentioned that to you yesterday. It didn't matter that PPI was up in April. It mattered to the market that it was down in March. Isn't that crazy? But it's what it is. And this is because the market's grabbing on to anything to say the Fed is going to cut rates. Understand that that's what the market wants. When it happens, you probably have made a top. And you'll say, why? And my answer is because the only reason the Fed would cut the rate when it happens is because we need it, and the economy or growth in different things has turned to the downside. But until that happens, where's the momentum? It's been consistent for a year and a half. The market wants to see Fed cuts. I call them the naysayers, and they're persistent, and they win the day. Got it? If you don't believe that, you're missing the whole boat here. Now, tomorrow we're going to get housing starts. We're going to get U.S. April import-export prices. Jobless claims are going to come out. The Philly Fed's coming out with its activity all at 7:30. It'll be a busy 7:30. Then at 8:15, we get the Federal Reserve. And this is going to be important, your monthly industrial production and capacity utilization. How efficient are we right now? Can we do away with some workers, or do we need to hire them because of what business is doing? You know, we'll be looking here at the Philly Fed because if you saw the New York, the Empire numbers for manufacturing, they were not good today. They were terrible, actually. Then the energy analysts are going to forecast another withdrawal. This is the time of year where you start taking out of everything we've stored. And the question is how fast you replenish what they're doing with that. So that's how I'm going to look at how these markets are. Now, in terms of price, the markets soared today. You will hear all-time highs in the cash market. Yep, but the futures are different. No, most did not do that. That doesn't mean that they can't do it. You see that energy prices haven't gone anywhere. And when you take a look at bonds and notes, they lost today 6 points, 9 points. You're back down to 104.35. In the 10-year note. It's a real important number. You're not at 105. You're down. You're down. Well, I said 105. You're not at 5%. You're at 4.345%. Got the difference? Big number. I kept saying one. I'm so used to transposing it. I'm sorry. Dollar got hit today because the traders are saying to themselves, well, we've got slippage everywhere. Why is the Fed going to keep interest rates up? They have every reason to drop it, except for the guy that runs the Fed. Now, yesterday as we were watching Fed Chair Powell speak in Belgium, do you think he didn't have this number today? What's wrong with you? Of course he had the number. Fed members, unless it comes out the same day and they're out of town, no. They generally get them just before they're released. They can review it because they don't want to do a mistake in what they're saying. And if they haven't seen it, they'll often tell you they haven't seen it. He didn't say that. He said that he's concerned that inflation is staying sticky. They thought it would be breaking more than it is, and he doesn't foresee anything right now. Now, that doesn't mean that he's raising rates or lowering them, but that is what he said. The market doesn't view the Fed as being correct. The market always tries to anticipate what the Fed is going to do, and that is why you are running. Number one, as is, the economy's doing well. You can't disagree with that if you're looking at the earnings of the companies as to how they've just come out. You can't argue that until you get to the next jobs report, because we have basically still full employment. The next argument will be, and I promise you this is what you're going to get to, hey, if we go to 4% unemployment, is that the trigger? Because we've already seen CPI falling, and PPI fell in March. Not April, but March. So they'll say that might be the trigger and the market will go again. So interesting times that we live in. Now, when we take a look here at the close only of an E-mini weekly S&P 500 chart, you're back up to these highs for all purposes, close only. When we come to the bar chart, well, you can see you're fighting this market pretty high. You've come up in the S&P here to the old highs as well. You'll see on one of the charts where I believe I've got them all laid out for you. You're over all the key moving averages. The only number to stop the market is the upper Bollinger Band, which it typically does. And you can see the old high was 53.33.25. You hit today 53.37. So you're basically at that high right now. You have an embedded reading. This tells me that on the pullbacks in the market, until we know different, the pros are going to buy this market on the pullbacks. Got it? And they won't stop, in my opinion, until the red line closes under 79. When we come over to the micro mini NASDAQ, the high had been 18,708.60. We're right now got tonight to 1817.15. So we've already gotten through that. Again, the embedded reading. Again, the resistance at the Bollinger Band. That should contain the market. And on pullbacks, I expect to see buying continue until the red line closes under 79. Looking for Bollinger Band. Traders will peel some out. They'll keep buying until that doesn't work anymore. Got it? You get your hot hand at the dice, you throw it down, you keep buying the numbers until eventually you know you're going to see the number that wipes it out. That's okay. What can you make along the way? I hate to say it that way, but it's an analogy. When you look at the Dow, the previous high had been 40,358. No, you're 300 points still away from that one. So that's why I said not everything hit it. And when you come over to the Russell, 2167 on the futures is the old high. You only hit 2132.5. I say only. It's nothing. It's within a hair's breadth. And again, you have the embedded readings. So I believe that the markets are going to get bought on the breaks. There's a rule and a way to do it. You had bullish crossover. Take a look tonight, the 18-day over the 100. I'm coming back now to the Dow. The 18 just got over the 100 here as well. And the markets, generally when you do that, you go up and you make a higher high. We'll see if that's the case. Then we come to the 10-year note. We'll look at you're developing the embedded reading. You cannot count today, so throw out Thursday. But both numbers over 80 on Wednesday, not on Tuesday. You're developing. You're not with an embedded reading just yet, so please be patient with it. It is so important to get that. Now you're overbought against the Bollinger Band. 5-year note, overbought against the Bollinger Band. So you're at a resistance point. These are not sell points. They're resistance points, but you're not trending per se. The momentum is certainly up, and that's what this trade is about right now. This whole thing in the stock market and this, as a futures trader, is about momentum. And the momentum is up, and until the slow stochastic loses that, on the pullbacks, I believe these markets are still strong buys. The dollar index failed. Now, if you take a look, how long have you been under the 18-day average? And what do I teach you? That line, the red line's the line in the sand. You could have all the buy signals in the world or sell signals in the world. They don't mean anything unless if you get a sell signal, you're under the 18 and then it's valid, or on buy signals, you're over the 18. Now, in the case of this, you're oversold. Any reading under 30 is oversold. You don't see both the red and the blue going sideways under 20, so it's getting overdone. That doesn't mean it can't reach further. It's not a buy because it's overdone. The trend is clearly down. On hard rallies, you have to look and see when you get it, do you get away from being oversold? But for the time being, the dollar bulls got caught and they are sitting on the sideline or in the market hurt, one of the two. The flip-flop would be true of the euro because 57.6% of the dollar index is made up of the euro. So therefore, you're up. Now, the resistance is the combination of the 100, 200-day average, and you're there, and the Bollinger Band is following you on the way here. You're not embedded. Be cautious, please. That's all I can tell you. Could the market keep going? Anything can happen. The probability is that in very short order, this market's going to get under that average for a bit here and back into the Bollinger Bands, and then I'll take a better look at it. In the British pound, same thing. So all of the currencies of importance, the Swissy, just take a look at everything. You will see that they jumped on the dollar as the euphoria hit the market and traders went, this is where we've got now what we needed. I heard today all over CNBC, traders come back on. They still believe a July rate cut is very much in the cards. Others believe September. Others believe December will be the first one. And a whole group think, why do you have to cut? There's no reason. Inflation is falling, but at a minute pace, and the economy is still in great shape. Why do you need to cut to get inflation to come back? Where's the curve you're trying to get ahead of? That is the question that has to be asked. At some point, if you accelerate with no growth in the economy, that stops, and you suddenly see the inflation numbers slip away. I get it for the cut. You're not there yet. So this is a momentum trade right now, and understand what you've got. Bitcoin wasn't going to be left behind. Anything today that was risk went to the upside in the futures markets. Now, that doesn't mean soft commodities. It doesn't mean the grain markets. It doesn't mean the meat markets. It typically means the currency markets. Could be sometimes interest rates, typically not. It's certainly currencies. It's the metal markets for always typically in that one. And of course, stock indices. So understand what you're dealing with as these things happen. Could you get up to the upper band? Most certainly. Has the market made a battle of the 18-day average at 63,000? It most certainly has. But what has it also done? It has used the gas in the tank and it's suddenly overbought. So it either embeds and gets a supercharge and it's got that full part ready to go. It went to that Tesla station, if they're still open, and away you go with that, right? Then we get to the differential between Brent and WTI. It continues to plunge. It's now about 75, 80 cents. That it's fallen. That's a lot, folks. I mean, you get these moves, and when they're a straight line move, they're painful for spread traders in there. What the market did is it fell back, and this is why in the currencies I was saying you're at a resistance. This is support, the 100 to 200-day average, and you have to agree there is a battle going on at that number. I don't see a trend. I certainly see the overall pattern is down and you're under the 18-day average, but the swing line doesn't have the lower highs, lower lows. The same thing is happening in the WTI. The battleground's identical and you are oversold. You've used a lot of your energy to get down here. It's a pun on words, if you will. In the gasoline, I said I thought you'd fight the 100, 200. If you'll notice, you're hitting one of those numbers almost every day, but this has the embedded reading. Now, where I think that you can get the pop in the market is if the red line closes over 21. That might mean that you want to get a bit of a rally going here, certainly back to the 254 level, maybe higher. Now, a week from Monday, I know it sounds crazy, it's Memorial Day driving. You haven't moved much. So the president, maybe he's releasing gasoline on the market so the American consumer feels pretty good. And what about this? We're going to get some entertainment. June 27th on CNN, Biden, Trump, gloves off, bare-chested, going at each other. You heard me, in the debate. So it's going to be fun. They've agreed to two of them, and they both need it. Biden's behind in the polls, and Trump, because he's in court, doesn't get out there. So this is where it's going to come about. Want to bet me on the ratings? I predict through the roof for the first one. If the first one's crazy and out of control Trump again, the second one will do even better. So who the heck knows how it'll do? People just turn in for the event. I don't know if they care what they say. It's the event. You're embedded in natural gas. Not a surprise to me. You've got a potentially hot winter coming. And by the way, good news for the people in Canada. The winds have shifted for Fort McMurray, that oil sand town. And it appears that town is not going to be in the line of the fires that are there. And remember, we're going to start seeing that smoke as it drifts down here. Depends how big these fires get again. They burned a lot, but they had drought again this year. So what they didn't burn out, they're going to come for you this time around. So it's nerve-wracking. But you keep hearing me talk about these Bollinger Bands, the embedded reading, and how do you put it together. I have a course on it. You can do it easily. It's, 11, 12 chapters. You get the charting software, the morning subscriber videos where you see what I do and I enhance it. I blow it up for you each and every morning, say, this is what it's doing. So if you'd like to learn this, two ways to do it. Number one, you can go to our website, iraepstein.com, education. You can move your cursor to the top here. And while you're watching this advertisement that plays next, that cursor will work as well. I'm Ira. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.